Hey traders, TG Watkins here. It is November 9th. It's Thursday night when I'm recording this, so after the market. You guys will be seeing this Friday morning sometime. And I just wanted to say thank you for those who've been subscribing. We got a bunch of new members from the Orlando Money Show that we were at about 2 weekends ago over Halloween weekend. It was great meeting some of our existing members and then a bunch of new people out there. I had a great time. I think down here, I think I showed you guys, this was one of the pictures that we had me on the center stage and in the main room. So that was pretty fun. And yeah, so just want to make sure everybody knows about Profit Pilot over here as far as the Twitter pages. So if you guys can come check that out. Otherwise, we're always running a special here, $7 trial for 30 days if you guys want to. And then let's dive into it. We finally got some action today. Let me first start here because this is one of the things that we've been looking at. You know, this market finally turn around, and this is kind of the theme that I had in Orlando at the Money Show when I was giving the presentations. I said, look, we have a bunch of things that are indicating that this thing should turn around sometime soon. You know, like it's been 3 months, put call ratio is really high, the TNX, I'll show you guys that, breadth is super low, like all these things were kind of starting to stack up that, man, it's like, okay, something is going to change. We're just waiting for that spark. We have a lot of kindling. When is that spark going to happen? And some of the things that you could see that we talked about in the last video, you could see that price went lower and the internals went higher, so it was less bad. And then finally, last week, we got this big ol' move like this, and you could see that across the board, everything started to spike up. Now, the thing I want to show here is that since we did get a pullback, well, we finally got a little bit of a pullback in through here. So number of stocks over the 20-day SMA definitely surged. It's not like a totally too high level, but it is a level where it's like, okay, we've gone up for a week. I'll get into the charts and I'll show you guys kind of what I was seeing as far as, okay, we should be expecting to pull back. And you know, we're still really good here on the 50-day. So we have a lot of room to go on the upside if the market can sustain that. Here on the new highs, new lows, we definitely saw that we had a surge. It's kind of backed off since then. You know, this was just kind of a jump. And then also, it's been earnings season. So we've been seeing a ton of names having earnings. Now, there are a lot of names that didn't do well, or maybe the market didn't react well, or whatever it is, but a lot of names went down on earnings. That's why I don't like to trade earnings, because it's usually a roll of the dice. I don't have any advantage trading stocks. Maybe if you trade options, you can do a vol crush type situation, but as far as me, with just choosing stock, I got to be picking a direction. I don't have any advantage. It's a total just luck of the draw. Which way is it going to go? But there were a fair number of names that have been going up based on their earnings. So those are the names that I'm starting to watch because, well, they went up, and we need to see if they can continue, and we need to get into something like that. So if we look at the market itself, and I'm going to show you guys the major indices plus the equal weight, because that is also going to be kind of helping to tell the story of what is going on here. So number one, we had the FOMC right there. And so the FOMC is always a little bit tricky. We've definitely seen it where the initial reaction at the end of FOMC day can also reverse. In this case, I guess the market liked whatever Jerome Powell said, which basically was pretty neutral, a little bit dovish, and it jumped up. Plus, we then had earnings that seemed to help this. So there does seem to be a bit of a change out there. And again, I would really, really like to lean bullish on all this. I just can't chase it here. So other than the 1 and 2 days of the market moving up on Jerome Powell's FOMC, if you weren't in, you didn't miss much, okay? Because you can see here that basically for an entire week, we've now just been going sideways. And really at this point, I've been waiting for the market to pull back, and we did finally get that today, and it was based off the 30-year bond auction. Now, I want to also show you, here are the Moxie power dots. I don't talk about these too often, but man, this one worked out perfectly. So the Moxie power dots, I'm sure a lot of you guys are familiar with the squeeze. This is kind of like the squeeze for Moxie. It basically tells us when the 15-minute Moxie indicators are within 10% of each other. Because when they become close like that, like they one line, that means they agree with each other. It means they're strong. And look what started to show up right as this thing was starting to roll over. In fact, it started to show up yesterday before everything went. So today was pretty boring in the morning. I was actually texting one of my trader friends. I was like, man, I'm bored. He's like, yeah, I'm already working on something else. And I thought to myself, like, I bet that's when something's going to happen, because, of course, when the market just bores you to death, that's when something happens because it comes out of left field and gets everybody lulled into complacency. So I had all my positions set and figured out what I needed to do, and I was just kind of waiting for it to happen. And 30-year bond yield was the trigger, and you could just see exactly that. That's when price finally broke the 15-minute 50, and we finally also broke the hourly 21. And on the daily chart, you can see starting to fill that gap right in through here. So that worked out pretty darn nicely. I think we've got a little bit more to go. I'm not quite satisfied with this. I don't think with just one day pullback is going to do it. So let's see if this goes a little bit further down with that. And then you can see also the NASDAQ, same thing, big move up. This is why I'd like to think that we are going to be bullish after this, but we need to see confirmation. And so far, we're just getting the first move of what I was looking for, of price moving down like this, again, finally breaking and breaking like that. And let's see if we can get a little bit closer to these moving averages and then kind of confirm. Now, if we look at that, that's the NASDAQ. If we look at the QQQE, which is the equal weight of the NASDAQ, you can see it's a different story. It's a very, very, very different story. In fact, you can see here that there's a perfect trend line right here that price has been following in this channel, whereas if you notice, the actual NASDAQ is well over this trend line. So what does that tell us? Well, yes, a lot of names did move up here, but as far as this right here and the actual NASDAQ being higher, that tells us it's basically the Magnificent Seven, whatever you want to call them, but the handful of mega cap names that we all know, they're the ones that really helped carry the market over the last couple days and basically took it from here up to here, whereas everything else basically went sideways. And this is the difference that you can see between the regular SPY, the regular NASDAQ, and the equal weight versions of those, and the IWM. So I'll get to that in just a second too, but you could see that I was watching the equal weight thinking, okay, I need to suss out the difference in power or the contribution between the mega caps and everything else. And you could see over the last day or two that the equal weight NASDAQ actually made a lower high compared to the regular NASDAQ that was making a higher high. And I was like, yep, okay. That's telling us that breadth is not doing well, that the majority of stocks are not doing well compared to the 7 stocks that are. And that's the difference, that's the discrepancy between the regular and the equal weight. So just kind of something to be paying attention to with that. Now, if we look at the IWM, this one is actually doing quite very much what I was looking for. So number one, it was the first one to pull back. I think that was Friday. Friday ended on a high, and so Monday ended down. And you can see it kind of came down here, continued to get rejected by these moving averages, finally fell off that moving average on the hourly chart. And basically, if you guys know my 50-250 maneuver, did that perfectly, 50-250 maneuver, and ran right into the daily 50 as well. So we don't know yet if this is going to end up to be bullish. I'd like to think so, but if it's going to be bullish, this is a potential trampoline move, and that is when price is below the 50, but the Moxie indicator is above 0. Basically, that means that the energy and momentum from Moxie is positive, it's bullish, and price should not be below the 50. Now, we can't just go buy it right there because, it could fail or it could keep going down. But it is setting a kind of like a spring-loaded setup. But we need to wait for that spring-loaded setup to actually, really, really wind up and then trigger. We're waiting for the trigger, okay? So we've got specific rules for what that looks like. It's not even close on the 15-minute time frame yet, so I think we've still got a little bit more time. And if you look, the Tesla did exactly the same thing. Now, not saying that Tesla and IWM are related at all. I'm just saying that they have similar patterns. These are why these patterns and these setups that I teach are universal. They can be applied to any stock in any time frame because you can see Tesla or the IWM, hey, they're doing the same thing. But you can see leg, heel, arch of the foot, ball of the foot, and I'm looking for that elf toe. You can see the 50-250 maneuver right there. And now I'm looking, can't confirm it yet, too early, but I'm looking to see if this is going to be a pullback into support and then we shoot up like that, because this is setting up to be a nice bullish setup, but we have to wait for it to actually confirm because it may not. Then the other thing is, talking about the Magnificent Seven, Google was also another one that was giving me a heads up that the market needed to pull back. number one, I could tell it needed to pull back. It was going to at some point. And number two, I actually made a post to my subscribers today. Let me bring this over for you guys, so just so you can see what's involved over here with the Moxie trading room. So you can see here this morning, yeah, I said, yeah, we're looking for Google, still watching things like Google coming up into the daily arch of the foot, hourly 50, 250 maneuver. If it happens, it should start when price breaks the 15-minute 50. That's the key right there. And I said this at 7:11 a.m. I'm on the West Coast time, so that's PT, Pacific time. And then I was looking at this, Tesla making progress. Also looking at this, I was like, hey, is Google going to be next? And sure enough, this was at 7:23, and then a little bit later, 10:09 a.m. on the West Coast. There it is. There's Google, NASDAQ, and the SPY all breaking their 50s, their 15-minute 50s, apparently after the 30-year bond auction. And that was it. So this morning, I was calling it, and in the Moxie room, I was giving heads up, I was giving guidance, I was telling people what to expect and how to look at it and what should be happening. And we were just sitting there. It's like fishing. We had our fishing rods out. I told you guys what to be looking for. We're just waiting for the fish to bite whenever they chose to bite, and they bit right there at the 30-year bond yield auction. So right there. And now at that point, you can see again another 50, 250 maneuver right there. So now we're just going to let this kind of come down, figure out where it wants to come down to, and then if it starts to head up, then we can catch it on the way up like that. But right now we're kind of in pullback mode because, well, this market has been in just melt-up mode after the FOMC and earnings. So yeah, that's the first move. I like to trade the second move because the second move, believe it or not, is actually more legitimate. It is easier, and it is bigger. So that's what we're waiting for. So if you guys think that this was a big move, then if the market cooperates and if the market decides to go up after this pullback, the next move will be bigger and more robust, stronger, have a longer duration, all that kind of stuff. And so that's what I'm looking for. If it doesn't happen, we won't take a trade. That's fine. If it doesn't happen, then there's no setup. So as strongly bullish as I am, as much as I'm looking for it, and as excited as I am, we still have to wait for that particular setup. So don't get me wrong. I'm not just going to be saying, hey, we're bullish. I got to look for that confirmation, and that's what we got to see. So first things first, pullback. Now I need to see whenever this pullback is done and find support. And if it doesn't, no harm, no foul. We didn't take a trade. All right, guys. Well, thanks again. Remember to come on over. If you like the Moxie Indicator, obviously you can pick it up on StockCharts.com. You can pick it up on Thinkorswim and also TradingView. And then if you guys want to come join the Moxie Trading Room, come check it out over here at simplertrading.com/Moxie. All right, guys. Thanks again, and we'll see you next week.